My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends? I'm just trying to save you some money. My job is not just to entertain, but to educate, to teach, put in context. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. Do you really want to sell stocks after the worst day for the averages in 2 years? Does it make sense to bail on the market when the Dow just plunged 1,032 points, S&P plummeted 3.35%, and the NASDAQ nosedived 3.71%? Is that the right thing to do? Or should we treat this meltdown like a viable pullback? Honestly, it depends on 5 factors. So let's check them down. 1, do you have enough cash to buy something into weakness, or would you need to borrow money to make that happen? If you don't have a decent amount of cash on the sidelines, you shouldn't do any buying here. If anything, maybe do some selling the next time we get a moment of strength, so you'll be prepared for the next big down day. History, by the way, suggests we could bounce tomorrow. So maybe take advantage of that lift. Do some selling. These problems are not going away. 2, look at your bank account. Do you need that money in the near term, say the next 12 to 18 months? If you don't think you'll need it and you haven't bought anything yet, then I think it makes plenty of sense to start putting that cash to work, but only if the market gets hit again. Do not buy a rally, please. Get a rally? You missed it. It's okay. 3, you need to recognize that there might be more bad news ahead that could take us to still lower levels. We still aren't oversold by any means. It's hardly down at all. So while we just had the worst session in 2 years, it's very difficult to call this a tremendous buying opportunity, especially given all that frothy action last week. 4th, do you mind getting the bare minimum return from a certificate of deposit, CD? If so, I can't really help. You don't need me. Otherwise, I suggest coming in tomorrow, if it's down, and buying a utility ETF or a dividend ETF, because even if the stocks are high, anything with a good yield is a bargain versus the incredibly low rates you're getting from bonds. 5th, ask yourself, do you mind owning individual stocks? The best values here are in individual stocks, not the indices, because the indices are experiencing torrential selling, if not a meltdown. It takes the good down with the bad. We're going to have a couple good ones later in the show. You'll know what I mean. Now, once you ask yourself those 5 questions, then yes, for some people, it may make sense to start picking at beaten down stocks, especially if they keep falling. I am in the camp from my charitable trust that you should be picking, and you can follow what I do by joining the ActionAlertsPlus.com club. We're in shape, 20% cash, ready to do some buying. Which stocks are bargains in this market? Which ones are too toxic to touch? I need to emphasize again that the big risk from the coronavirus outbreak has to do with interrupted supply chains and a concomitant business slowdown worldwide. The Chinese government has imposed the largest quarantine in human history on its own people. And it turns out that American businesses, we now learned, are far too dependent on Chinese manufacturing for some really essential stuff. By the way, I'm very worried about pharmaceuticals. I mean, they make the majority, or at least the ingredients. That means we have to be careful. You don't want to buy something that's about to have its supply lines cut. Let me give you some examples. Now, anyone who watches this show knows that Apple to me is a terrific company, terrific stock, but I can't recommend buying it at this very moment because I think you could have more downside. I think some analysts could turn against it. I expect analysts to start downgrading the stock on supply chain worries, not to mention lost Chinese business. And that'll be your chance. Hey, by the way, we've gone over the component suppliers endlessly that I've told you that I'm nervous about: Cirrus Logic, Skyworks Solution, NXP Semi, Qualcomm. Those are in the blast zone, and their stocks are not yet low enough to be worth picking at. They all rallied after phase 1 was agreed to in the trade war with China. Travel and leisure, they're still going to be under enormous pressure. Today was really day 1 of the accentuated weakness in Carnival, Royal Caribbean, and Norwegian cruise lines. How the heck were those cruise stocks able to stay so high last week after the tragic corona outbreak on Carnival's Diamond Princess, which turns out to be, of course, really maybe the worst thing that's happened in this whole epidemic? I'll say it again. You don't want to be stuck on a cruise ship in the middle of a pandemic. The numbers have to come down. I have no doubt that cruise traffic will eventually make a comeback, but think about it. It took Chipotle, a fantastic company, 18 months to recover from its last big healthcare scare. I mean, the scare was terrible. In December of a couple of years, it took 18 months from when they had it. It was up in Boston, remember? So why should the cruise lines be any different? Give them 18 months, for heaven's sake. Meanwhile, the casinos with lots of exposure to Macau sold to you. I mean, the Chinese gambling havens, they're nightmares. Think Wynn, Las Vegas Sands. But on the other hand, what's being brought down with them? Because it's part of the industry's Penn National. That's a much more domestic operator. It could be very good, especially now it's got partnership with Barstool, and a lot of people talking about the NFL and gambling. How about the airlines? Man, air traffic will be down so much that you need to expect another round of estimate cuts that will take the stock still lower. I wouldn't touch a hotel name here, especially the hotels with lots of exposure to China or Chinese tourists. Those all need to be sold, even with their stocks already down a great deal. Frankly, anything travel-related is just bad news. Until this weekend, I didn't see nearly as much risk in going to, say, Milan. I went there last week for Fashion Week. Same week as this week. It was fantastic. It is a huge global tourist destination. In fact, Milan Fashion Week has become the vacation event for people from the Chinese mainland. Now, Milan's a ghost town because it's become the epicenter of a coronavirus outbreak in Europe. I genuinely believe that China has begun to improve, and the fact that their air quality and their smoking rates are so negative may explain why their country's been harder hit than what other countries that do get the coronavirus will be. Yes, they could be a bit of a global outlier because of the unhealthy nature of their populace, but there's nothing preventing a tourist in Milan returning here with the virus. That's my top-of-mind worry. I take that plane all the time, lands at JFK. I don't know. Do you want that? It's going to happen. I mean, I don't know how you stop people who are in Milan who might have the virus when they land here. Fortunately, there are areas that will not be hurt. Much of software, especially cloud-based software or social media, they haven't been able to penetrate the Chinese market anyway. And that's why those stocks might be actually the first ones to reach for tomorrow, even though everyone was pronouncing the death of FANG. Those people are probably going to be wrong. I'm hearing a lot of people getting excited about the oils. I can't get my head around that. We own BP for my charitable trust. Well, you know what? It's got a solid and growing dividend yield. Unfortunately, that's not enough in a world where these oil companies and the gas companies have become pariahs. It's only going to get worse. The industrials were still rallying into this maelstrom as recently as last week. I mean, I think you can own one, but be aware. I think you're probably going to take a bit of a beating in it if the global economy doesn't get back on track. Final problematic group is the banks. When there's a big sell-off, the banks are never the place to go. They always act terribly. This time is because of the yield curve. Long-term interest rates are plummeting, which means the banks will have to once again rely very heavily on fee-based revenue. They can't make that much on loans. I'm betting the numbers need to be cut. Number cuts mean sell. Actually sold a bank today for my charitable trust that we own forever. With these parameters, okay, now I'm talking about the opportunity. I am always going to be opportunistic on the show, particularly because I was so darn negative for weeks. And remember, I came back after the Super Bowl, I said, do not buy this rally. First, I like the staples, classic defensive stocks. I like Coca-Cola and Mondelez, both of which reported excellent numbers. Their yields can save you here. They're what you buy in a slowdown, and we're getting a slowdown. Second, the drug stocks are looking pretty good. I'm still hopeful that Gilead may be able to cure this virus. But Merck and Eli Lilly and Johnson & Johnson will make sense into weakness. By the way, Moderna had some good news. They're going to be putting a vaccine. And remember we had them? We kind of like what they're doing. They're a vaccine into testing in April. I'm not as sanguine about the health insurers, given the ascendance of Bernie Sanders as the likely Democratic nominee. As long as he's the front runner, that group will be hard to own. Third, you know what, the utilities, I know they've had such a run, but you know about Dominion? It hasn't rallied as much as the others, letter D. We've always liked American Electric Power and Con Ed. We're returning to those. Fourth, gold has more room to run, and I've got something on that later in the show. I wish I could be more optimistic about more groups. Not yet. I don't think it's worth the risk for many of them. For example, let me give you a class example. Nike, all right? I like Nike, but if Europe slows down, then I fear a second wave of number cuts on top of the first wave from China. I like the rails, but they haven't come down nearly enough. We're about to see a major slowdown in worldwide commerce. I like financial technology, but I think it's still too early to buy them because they have too much exposure to consumption. Consumption is going to slow. Last point, we've been up for ages, people. We've had a huge speculative surge last week in the stocks like the Plug Powers, the Ballard Powers, the Virgin Galactic, the Battleship Galactica, whatever, marijuana cohort. Yeah, I know, Spice, Space, you know what I mean. There was a ridiculous amount of froth. Okay, that's ending. Bottom line. Don't try to be a hero. It's never worth it. By the way, there's no hurry. If you want to buy stocks in weakness, take your time. You're Warren Buffett this morning. He's in no rush. And if you don't have enough cash, well, you know what? How about the bounce tomorrow? Sell the stocks that I've just described as being too toxic, move into some more defensive plays, and I think you'll do fine. But stay the course. Don't start selling big now. D in Virginia, D.
Booyah, Jim. This is Dee in Virginia, longtime listener and caller, too.
Oh, thank you,
How are you
Dee.
doing?
I tell you, I had a good day, had a good weekend, coming in hot. What's up?
Awesome. So with everything that's going on now with the coronavirus and the airline stocks are going down, especially all the news today, I wanted to see, is this a good time to take advantage? Is Southwest still a buy for my long-term stock portfolio?
I think you've got to wait a little bit more because this morning, Becky Quick, in an amazing interview, I wish other people at the network had watched. I don't know if anyone else was saying how great it was because I got to tell you, it was fabulous. She asked point blank. She asked him, you can buy Southwest Air. He said no. There's fluff in there, fluff in that stock. People are thinking he does want to buy it. He's not. I don't want to recommend that stock until it goes below 50. All right, let's go to John in New Hampshire. John.
Hey, Jim. My question was about Disney. So after its recent earnings, which they ended up beating our expectations, the stock dropped by about 8%. Mm-hmm. I was just curious if this slump is due to the coronavirus or if the stock is really
it's the parks.
Valuation.
It's the parks. And I told members of the Travel Trust, this is, I'm talking about ActionAlertsPlus.com, that I said, look, it's going to come in. It's going to come in. It has to come in. People haven't cut numbers yet. Boy, what a natural thing to buy. Can you imagine if that stock got down to 120? How great that'd be. Let's go to Bob in New York. Please, Bob.
One heck of a day, huh, Jim?
Yeah, I'm looking at this Moderna going up after the close, Bob. And they say they may have a vaccine. We like them. They should come on the show. Go ahead. I'm sorry.
Well, I've been a follower of yours since your days back at WOR Radio back in the day. Remember those?
Holy cow. Oh, Pop loved that show. Holy cow, he loved that show. What's up?
Listen, over the years, you've had an investment philosophy for certain stocks, and that philosophy was own, don't trade.
Yes.
I own one of those stocks and don't intend on selling it. Do you still support own, don't trade for Microsoft?
Absolutely. As a matter of fact, I was thinking if I were a young person and I missed the move, you're getting your chance to get back into Microsoft. You do it gingerly. Satya Nadella is doing an amazing job. That's an opportunity. I'm so glad you brought it to our attention. Let's go to Jim in Michigan, please. Jim.
Hey, Jim. Big booyah to you from me and my Michigan Wolverines.
Oh, man. You and Adam Schefter. What's up?
Not much, man. Hey, I got a question. Under global situations and the presidential race, I want to know what your thoughts are on LMT, Lockheed Martin.
I think it's good, but you're getting an opportunity to buy L3 Harris. That's what you want, L3 Harris Technologies. I think it's superior to the stock of Lockheed Martin. I'm very excited about that Moderna, that they're doing it right, because Tony Fauci seems to be on board. I'm sorry to just be sidetracked, but when you get any good news in this moment, don't you have to talk about it? Because it was a brutal day. I don't want you to be here. I want you to take your time buying into weakness. But we're almost done the selling. I don't want you to keep selling down here unless you need the cash. I want you to swap out of the toxic groups and do some more defensive plays. Look, there's plenty of time. We'll be picking industrials, and I'm not against FANG, okay? I'm not against FANG. I'm with FANG. They have money tonight. Market's finally taking the coronavirus seriously. Amen. So after today's tumble, what should your next move be? And remember, leave room for if we start getting cases here. Don't make a move before hearing my take. Then gold was able to rally today. Price is hitting a 7-year high. Is there still time to consider the precious metal? And the coronavirus is putting remote working to the test. But I am talking to one of the companies that's helping companies do remote contact center work. Don't miss my exclusive with Five9. It's a very interesting situation. And stay with Cramer.
Don't miss a second of Mad Money. Follow @JimCramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.